Hello, I'm David Frazier, aka the Market Monk, and this is our daily Market Monk show where we strive to tell you everything that you need to know and nothing more regarding developments that are likely to affect your investment portfolio. Well, today on Thursday, September the 25th, we had a pretty big sell-off in the U.S. stock market with the Dow Jones Industrial Average closing down 264 points today as compared to yesterday's close. And if I look here real quickly at some notes, in percentage terms, the Dow was down 1.5%, the S&P 500 index was down 1.6%, and the NASDAQ Composite Index was down 1.9% today. So a fairly substantial sell-off in the U.S. stock market today. Now, if you listen to the major news outlets and to most of the folks that come on most broadcast financial TV shows, you probably heard those people say that today's big sell-off was due to a big drop in durable goods orders for the month of August, as well as being dragged down to some degree by somewhat of a sell-off in Apple, whose shares were down a little over 3% today as a result of some problems with the iPhone, the new iPhone 6 that is. Now, whether or not those factors really had any major effect on stocks today, I'm not sure of that. I don't ever pay any attention to what these folks on these major financial TV shows say or what you read in newspapers. I mean, unfortunately, most people who write articles about the financial markets and who oftentimes comment on the financial markets, oftentimes, very unfortunately, don't have a lot of training or experience in the financial markets and actually managing portfolios or doing research and analysis or understanding economic and financial market indicators. I said a lot of the folks. That's not true, of course, for everyone. But a lot of those folks, they just don't have the right experience and background. So they're going to pick up on whatever news story is easy to talk about and blame a big drop or big rise in the financial markets to that news story. So now, the reason I say this is, well, for a different reason also. Yes, there was a big drop in durable goods orders for the month of August. They were down approximately 18% versus the prior month. But during July, orders for durable goods was up substantially. I can't recall the exact number, but I think they were up 33% versus the prior month. So surely if you have a huge increase in 1 month for any given product or service, well, oftentimes you're going to see a fairly substantial decline, that is, I shouldn't say healthy, during the following month. If we look at the overall trend of orders for durable goods being goods that last for a fairly long period of time, such as household furniture, consumer electronics devices, office equipment, automobiles. If you look at the overall trend of durable goods, they've been up, for ever since the beginning of this year, they've trended higher. So, and even if we take out that big increase in July and the fairly big drop during August, the trend is still up. So this is not a major issue in my opinion. I think what's really going on here is what I informed subscribers to our newsletters this past Monday, and that is that the trading action in the U.S. stock market clearly reveals that financial market participants in the aggregate have become more cautious and seem to be somewhat concerned about the future direction of the U.S. economy and stocks. And when I say that, I'm focusing primarily on the relative performance of the 10 major stocks of companies that operate in the 10 major economic sectors. And what we've seen is for approximately 2 months in a row now, not really, I say week after week for the past 2 months, defensive stocks, that is stocks of utilities companies, telecommunications companies, healthcare companies, consumer staple companies have outperformed stocks of growth companies and cyclical companies. And usually that happens only for one reason. That's because financial market participants know that those types of stocks, if there is a big downturn, an ongoing downturn in the markets, those stocks tend to fall by a lesser amount than growth and cyclical stocks. So the fact that people have been putting more money into those types of stocks, I mean, that's what causes them to go up more than growth and cyclical stocks. That's a concern, and that suggests that financial market participants have become more concerned. Next, something else that I had mentioned to our newsletter subscribers last Monday, whereby I told them that, in fact, I think my headline was that our indicators suggest that stocks are due for a substantial pullback. And I stated in the weekly update that I provided to the subscribers that I expected that pullback to occur within a few days, and that's exactly what has happened. Now, I don't always get everything right. You know, like anyone else that trades securities, invests in financial markets, gives advice on the financial markets. You know, there are times I make mistakes, but I usually don't make that type of statement. That is, that our indicators suggest stocks are due for a substantial pullback, unless I've got a lot of evidence that support that type of claims. And what was some of that evidence? Well, the employment market has slowed, or I should say did slow, for the second month in a row during August, meaning that fewer jobs were created during August than during July, and fewer jobs were created during July than during June. So there were a fewer number of jobs created during each of the past 2 months. Well, that's obviously not a healthy environment regarding the economy. The housing market is showing signs of slowing, with the construction of new homes, which is a leading indicator for the housing market, as opposed to sales of new homes, okay, which are coincident or somewhat lagging indicators. The construction of new homes fell over 14% last month, and you know that's a big drop. Next, manufacturing activity around the world, really, but at least in the United States and Europe, is showing signs of peaking. Next, corporate profits look as if they might have peaked during this phase of the economic cycle. And lastly, the Federal Reserve told us last week that they plan to further reduce their purchases of U.S. government securities, meaning they're going to provide less stimulus to the economy. So, you know, we got a lot of fundamental economic factors going here that lead me to think that, you know, we might see the economy slow during the months ahead. And generally, when the economy slows, business sales tend to slow, and therefore the profits tend to slow or decline, and stock prices are ultimately determined by the level of direction of corporate profits. So that's not a good thing. And then if we just look at the trading action of the U.S. stock market, I mean, you have the cumulative advanced decline line has been trending lower since, I think, the first week of September. I'm looking at some notes here over to my left. Since September 3rd, the cumulative advanced decline line has been trended lower. The percentage of stocks that have closed above their 200-day moving average have been trended lower since for the past 11 weeks. The S&P 500 index and the NASDAQ Composite Index fell today below their respective short-term 50-day moving averages. And historically, when we see this type of trading action in the stock market, especially when we get the economic indicators that I've mentioned indicating a potential slowdown, usually you see stocks fall and trend lower for at least several weeks. So I think that's what's really going on here. I wouldn't pay too much attention to the durable goods report, and you know, who cares about Apple? Of course, you're thinking, who cares about Apple? I say that because Apple's one stock. One stock. I mean, you know, yes, it's a major component of numerous financial market indices, and it weighed down the performance of those indices today. But you know, the performance of one company, one stock, in reality, over time, is not going to affect all other stocks. So I'm going to wrap it up there. Hopefully you got something out of this, and hopefully you have a little bit more clear understanding of what really happened today, as opposed to what you're likely going to hear from most other people that are claim to be so-called claim to be experts. Thank you for listening. I'll speak with you again tomorrow.